Fighting the set, rolling.
Hi, I'm Linda Crow-Sanderson, a local realtor, and my guest tonight is Greg Gibbons. Greg is a computer scientist who dabbles in real estate investment on the side. So, Greg, can you give me a little bit about your background, please?
Well, as you said, I'm a computer scientist. I've been working in computers since 1963, and somewhere around 1970, I bought a house for, not that I wanted to, but I felt that I needed to, and that started me into real estate. So I've been dabbling, as you say, on the side in real estate from time to time, but mainly I'm a government contractor in technical areas.
Okay. How did it feel? How old were you when you first bought your house, and how did it feel?
Well, I think I was 26, and I had a family and a new job. We had just moved. I had just taken a job teaching at the Navy School in Monterey, and we showed up and bought a house within about 24 hours of being there because we needed a place to stay, and we were horrified at the prices. You couldn't find much of a decent house for less than about $30,000, which seemed like a vast sum of money. So we bought this house, and it was on a much busier street than I realized. We had little kids that walked to school. There was no sidewalk, and it was really quite a busy street. And in the first year we were there were 2 fatal accidents in front of our house.
Wow.
So we really thought we needed to do something, move away. So we found another place to make an offer on and sold this house. We'd been there about a year or a year and a quarter. And when the smoke cleared from that escrow, there was more money left on the table than I had earned in the intervening time. And I said, wow, this isn't just somebody forgetting to pick up the correct change. I mean, there's something going on here. So I analyzed it. I wrote a little equation, a little simulation of what might be going on to calculate what would account for this. And it turns out that given the inflation rate of the time and the interest rate of the time and so forth, and the fact that you could buy a house, you could buy a $30,000 house and rent it for $300 a month, that was enough to pay all cost of ownership. So the ratio is like 1%.
Right.
So I looked at the results of this analysis, and I had always had this dream in the back of my mind of buying a sailboat and going to Tahiti. Mm-hmm. So I looked at this analysis and ran it out a few years. I said, well, my goodness, my initial investment would grow to enough that I actually could buy a sailboat and sail away. So we made a plan, and a 5-year plan, and actually in the event we were underway in 4 years.
Wow.
In those days, you could invest in houses and they would pay for themselves, and if you got any kind of a bargain on it, did a little bit of fixing up, a little sweat equity, you could multiply the amount of money you put in. My calculation showed about 32% per year compounded annually after taxes. You run that out for a few years and it really adds up. Of course, it's not the same anymore. The corresponding numbers are about 1/3%, and the rent that you get on a decent house these days is, maybe enough to pay the property tax, maybe not. So you end up, it owns you.
Right.
So.
Well, back in the 70s, wasn't the percentage rate like 8 to 10% on your money?
When I started doing this in the 70s, it was 7%.
Okay.
And the inflation rate was about 8%. So, you borrow money from widows and orphans at 7%.
Yeah.
You put it in a place where it grows by 8%, do the arithmetic. The more you do of that, the richer you get.
Right, right.
After that, I began to regard anything under 7% as basically free money. The conditions now are just beyond belief. But of course, the loans are very cheap right now, but the amount you have to borrow is so vast that it more than makes up for it. It's a mess.
Right, it is, and it's very hard for first-time buyers. I see so many properties, especially over on the coast, that are like $300,000 for a fixer-upper, and that's something that you can't even live in. It's single-wall construction, and you wouldn't believe how many calls I get on that sort of property. It's just wild.
Yeah, I do believe it.
So, okay, so that started you in the real estate investment. I want to know more about this boat thing. So was that the whole family, or it was just you and your wife?
Me and my wife at the time and 4 children.
Wow.
On a 42-foot sailboat.
And a 5-year plan.
And the trip lasted for just a shade less than a year and a half.
Wow.
Everybody came home in one piece.
Wow.
The marriage didn't quite.
I can understand that one. So let me ask you this. A lot of people are trying to get on this bandwagon of investments. There's investment clubs, all these investment seminars. A lot of these are pushing properties in other states. What do you feel about, what are your thoughts on purchasing properties in other states?
Well, if you want to, first off, you should be talking about residential real estate, and you should be talking about apartments, because houses are more difficult. Condos are no good at all because the condo fees wrecks the calculation.
Right.
If you can manage to get into, you know, some number of units, 5 or 8 or something like that, it does make sense, especially if you can get up to 12 or 14. You know, the old rule of real estate, the important factors about real estate are location, location, and location. In my view, it's location, location, and management company.
Right.
So if I wanted, I actually have property in Portland. I can get to Portland from SFO in one flight.
Right.
So it's not hard to deal with. The property that I have is under management with an incredibly proficient and professional management company. This is a company, I had to talk my way in the door because my units were too small for them in general, because they manage very large shopping centers and very large apartment developments. And they don't mess around. They have their processes, and they have, everything is all sorted out. You should see their monthly statements they send me. But they are good. They manage, and I've had some nightmares with management companies, let me tell you. A good one is a treasure.
Yeah.
So with that unit, that set of units, that's actually 14 units, and they're small, sort of not very fancy, but they run like a top. I bank the checks and read the reports. That's my idea of a nice investment.
Yeah, no, that's definitely nice. One thing that I had always heard is that if you were going to do that, you would purchase a minimum of 7 units on up.
That seems reasonable.
Does that seem reasonable?
Well, the problem with smaller numbers of units, there are a couple of problems. For one thing, when you get up to 7 or 8 or more units, you're dealing with investors. And these guys know what a thing is worth, and they won't overpay for it. When you're dealing with, say, a duplex, the beginning investors want to get in there, and they tend to overpay for them. So if you look at the rent ratios for duplexes, they're horrible. They might be 20 times gross.
Right.
You look for investment property that investors deal with, like the 8, 10, 15 unit levels. The corresponding number might be much better, like 8 or 9 times gross. You can almost make it with that, depending on your financing and depending also on how well it runs. If it's 8 or 9 times gross and the operating statement is full of fantasies and wishful thinking, you can get into a lot of trouble because you have, you know, legal costs and collection problems and all sorts of stuff. But if you have reasonably good property in a reasonably good neighborhood, and you're careful about evaluating the financial statements, you can do something like that. It used to be, you could, as I said, you could buy more or less any property. It would at least pay for itself on the revenue, and if you had to bet whether rents were going to be higher or lower 5 years in the future, it's nuts to bet that they're going to be lower. They're always going to be higher, maybe not a lot, but they roughly speaking don't go down. Prices fluctuate, but rents very seldom go down. So in those days, you would buy for appreciation. These days, the appreciation is all there. I mean, the prices are so high that there's as much risk that they're going to be flat or decline as there is possibility that they're going to increase. So if you really want to invest in real estate, it seems to me what you do is you find something 8, 10, 12 units or above that has an honest-to-God cap rate. You can probably get 5, 6% these days. Not in the Palo Alto area.
Right.
That would be awful. But that's why I went to Portland. It's a nice area. It has roughly the same economic outlook that we have, but it's not as overpriced. You can get cap rates of 5, 6, maybe even a little 6.5%, honestly, after all expenses. And if you're happy with that return on your investment, then just hold on to it. Let the loan get paid down by the rents. And if the prices go down, don't worry about it. You're still getting the revenue.
Right.
In the long run, the rents are going to go up, so your operation will become healthier, and the loan will be paid down. So if you're 30 or 35 years old and you do this, and you have, say, a 20-year loan that you pay down, you're 55 years old, now you have a free and clear property with generating more rent than it was, maybe twice as much as when you bought it. There's your retirement.
Right.
And it's a good retirement because, number one, you're living off the rent. You're not chewing into the asset itself. You're living off the proceeds that it throws off, and it's inflation protected because if inflation goes up, so do rents.
Right.
So your income comes up, will float up with inflation. So that's the fearless retirement.
Right. Passive income, that's a beautiful thing.
Well, many people, including people in my family, have invested in the stock market, and of course there's a lot of merit to that too.
Right.
But they always end up worrying that they're going to outlive their money. They start spending some of the principal, and my goodness, I'm already 80 years old, and my money's only going to last until I'm 85. What happens when I'm 86? I don't want to live that long.
Right.
It's a problem.
Right. Right.
With real estate as your investment, that's not the problem.
Yeah, I love real estate. That's why I'm in this business.
You do it for a living.
Truly, I as we were talking before, and we were saying how, deals fall apart and you never know and things are so chaotic all the time. And I was wondering, what defect in my DNA I have that I really enjoy this industry. But I do. I love real estate. Do you enjoy managing rentals? Do you enjoy collecting rents? Do you enjoy evicting problem tenants? No, that I don't. No, it's not for everybody because the problems just go on and on and on. Right. A large fraction of the renters are only marginally responsible, and without thinking about it all, they can make it a lot of trouble for you, the landlord. So it sounds like you deal more with rental units, or yes. have you gone into the idea of flipping, or have you done that before? Well, I was pretty active in the early 70s, but I'm constitutionally organized in such a way it's very hard for me to sell things. I just don't like to sell things. Okay. However, the idea of flipping, there are transaction costs. Mm-hmm. That's true. And they're significant. Similarly, when you have something for a little while, you know about it. You know where the skeletons are buried and so forth. When you buy something, you don't. Right. So there's always a risk you're going to get some kind of an unpleasant surprise. Yeah. If you do the calculation, like I said, that 30% a year from buying it, holding it for some number of years and selling it, those numbers multiply out to be very substantial, and it's safe. Nice. This flipping business, I think it's not for the faint of heart. I think it's foolish, actually. Okay. Well, that's good advice. You talk to people about how have you done in real estate? Well, I've done real well, had some losses, but why would you ever have a loss? Yeah, you shouldn't. Don't buy property unless it pays for itself. Absolutely. Which, by the way, kept me out of the real estate market from about 1980 until now. Yeah, that's excellent. Excellent feedback. So, okay, we've got probably about 1 minute left. So if you could wake up tomorrow having gained one quality or ability for real estate, what would it be?
If I want to be in real estate, do something tomorrow, I would like to have the magical ability to find desperate sellers who have first-class property in good neighborhoods in solid economic areas and absolutely have to get out tomorrow and will do anything to get a contract. Those are the people I like to talk to.
Okay. All right. Well, okay, one last question here. Is there something you've dreamed of doing in real estate for a long time, and why haven't you done it?
Well, I haven't been active in real estate for a long time, partially because the numbers have been upside down for decades, and largely because I'm really involved in my work. Real estate is a sideline, and it's not something that I found all that enjoyable. I liked it when it worked, and I liked what happened to the bank accounts, but it's a slog sometimes. I like my work. So that's why I haven't done it.
Okay.
Maybe I lost track of your question.
No. That's a completely appropriate answer, that it's really not a priority for you. It's more of just a hobby, kind of. Would that be safe, a hobby?
I don't think it's a hobby. I just realized, well, I was married to a woman who liked things. And I thought, how in the world am I ever going to get ahead of this? And real estate gave me the opportunity. That's the bottom line.
Lucky her. Well, we can see that, how well that worked. But that's okay.
All right.
That's beautiful. That's good. Well, thank you so much for taking the time to sit and chat with me. And I learned a lot from our conversation.
Well, thank you.
And I really enjoyed spending the time with you.
Well, this has been kind of fun. I appreciate the opportunity. I hope it's a matter of interest to somebody.
I bet you anything it is.
Good.
All right. Thanks so much.
Thank you.
Clear on the